Hey everyone, and welcome back to the channel. Today, we're diving into a topic that can feel a bit intimidating, but is super important for your financial health. Insurance. Whether it's for your car, your home, or your health, understanding the basics can save you a ton of money and stress. We're going to break down three key terms: premiums, deductibles, and coverage limits. By the end of this video, you'll feel way more confident navigating your own policies. So grab a coffee, get comfortable, and let's demystify insurance together. First up, let's talk about the premium. Think of your premium as your membership fee for being part of an insurance club. It's the fixed amount you pay regularly, usually monthly, semi-annually, or annually, to the insurance company to keep your policy active. Whether you make a claim or not, this payment is required. If you stop paying your premium, your coverage will lapse, leaving you unprotected. So why do we pay it? You're essentially pooling your money with lots of other people. This big pool of money allows the insurance company to pay for the large, unexpected expenses that some members of the club will unfortunately face. The cost of your premium is calculated based on risk. For car insurance, factors like your driving record, the type of car you have, and even your zip code can affect your premium. For health insurance, it might be your age and medical history. A higher risk generally means a higher premium. It's the price you pay for peace of mind, knowing you have a safety net. Now let's move on to the deductible. This is one of the most commonly misunderstood parts of an insurance policy. The deductible is the amount of money you have to pay out of your own pocket for a covered loss before your insurance company starts to pay. Let's use a simple example. Imagine you have a car insurance policy with a $500 deductible. One day, you have a minor accident that causes $2,000 in damage to your car. You might be wondering, why have a deductible at all? Well, deductibles help keep premiums lower for everyone. They discourage people from filing small, frequent claims, which would drive up administrative costs for the insurance company and, in turn, increase everyone's premiums. Generally, there's a trade-off. If you choose a higher deductible, you'll usually have a lower monthly premium. If you choose a lower deductible, your premium will likely be higher. When picking a deductible, a good rule of thumb is to choose an amount that you could comfortably afford to pay on short notice in an emergency. Don't pick a $2,000 deductible just to save on your premium if you don't have $2,000 readily available in your savings. It's all about finding the right balance for your personal financial situation. Alright, the third piece of our puzzle is the coverage limit. This is exactly what it sounds like. It's the maximum amount of money your insurance company will pay for a covered claim. Once the cost of a loss hits this limit, any additional expenses are your responsibility. These limits are spelled out clearly in your policy documents and can vary a lot depending on the type of coverage. For example, your auto insurance policy will have different limits for different things. You might have a limit for bodily injury liability per person, another limit for bodily injury per accident, and a separate limit for property damage. This is why paying attention to your coverage limits is so critical. It might be tempting to choose the lowest possible limits to get the cheapest premium, but this can be a huge financial risk. If you're in a serious accident, medical bills and repair costs can skyrocket into the hundreds of thousands of dollars very quickly. If your limits are too low, you could be on the hook for a massive amount of money, potentially wiping out your savings or even putting your assets, like your home, at risk. It's often worth paying a slightly higher premium for higher coverage limits to get that much greater protection. You're not just insuring your car. You're protecting your entire financial future. So let's put it all together with a real-world scenario. Let's say you have health insurance. Your premium is $300 a month. This is the fee you pay every month to keep your health plan active. Your policy has a $1,000 deductible and a coverage limit, or what's often called an out-of-pocket maximum, of $5,000 for the year. Early in the year, you need a medical procedure that costs $8,000. First, you'll have to pay your $1,000 deductible out of pocket. After you've paid that, your insurance starts sharing the cost. Let's say your plan covers 80% of the costs after the deductible is met. So, Of the remaining $7,000, your insurance pays 80%, which is $5,600. You would pay the other 20%, which is $1,400. So far, you've paid your $1,000 deductible plus that $1,400 for a total of $2,400 out of your own pocket. Understanding these concepts is all about empowerment. When you get a quote or review your policy, you're not just looking at a price tag. You're making a strategic decision about risk and protection. Ask yourself, is this monthly premium affordable for my budget? Is this deductible an amount I could pay tomorrow if I had to? Are these coverage limits high enough to truly protect my assets and my future if the worst were to happen? Don't be afraid to ask questions. Call your insurance agent or company representative and have them walk you through it. A good agent wants you to be informed. You can also shop around. Compare quotes from different companies, but make sure you're comparing apples to apples, meaning similar deductibles and coverage limits. The cheapest plan isn't always the best plan if it leaves you underinsured. And there you have it. Premiums, deductibles, and coverage limits explained. It's not so scary when you break it down, right? The premium is your regular payment for coverage. The deductible is what you pay first in a claim. And the coverage limit is the maximum your insurer will pay. Mastering these three terms is the first and most important step to becoming a savvy insurance consumer and taking control of your financial security. I hope this video cleared things up and made you feel more confident. Thank you so much for watching today. If you found this video helpful, please give it a thumbs up. It really helps the channel grow. And if you haven't already, hit that subscribe button and ring the bell so you don't miss our future videos on personal finance. Do you have any insurance stories or questions? Drop them in the comments below. I'd love to hear from you. Stay safe, stay insured, and I'll see you in the next video.